Welcome to the accendo-traders group. This is our weekend wrap-up trading plan for June 26, 2010. Our website is blog.accendo-traders.com, where we put together effective video, technical analysis trading plans on a daily basis. We believe the key for any successful trader is developing a trading system, a trading plan. And the key components of those trading systems would be identifying what market you're going to be trading in. One of the most overlooked parts of any trading plan is position sizing and how much you're going to buy on each position. What are you going to use to enter into your trades? Where's your stops, support, and resistance? How are you going to know how to get out of your winning trades? And again, what are going to be your triggers to get in and out of any trade? The week that was, well, the market ended down for the week. And unfortunately, because we were down so much, the market has once again returned to the negative side for the year. The light volume trading has continued. The only difference is that the sentiment has weakened to negative. All of our 10 major sectors declined this week, with consumer discretionary falling the most at 5.3%. We did start the week off a little bit strong. China announced that it was going to allow more flexibility with the yuan, and the market actually was up well over 100. But then on Monday, I guess as that news kind of, saturated throughout the rest of the day, traders sold off for the rest of the Monday, and we ended up actually down. On the economic front, we had a lot of negative housing news. Both new home sales and existing home sales dropped sharply for the month of May. It fell to 5.6 million from 5.7 million, well below the estimate of 6 million for existing home sales. And new home sales plunged to 300,000 from 446,000, also well below the 430,000 that they were expecting. And of course, that's in light of the tax credit is gone, and we still have unbelievably low interest rates. Also this week, the FOMC left their Fed's fund rate unchanged, and no new commentary, no new language was provided. On the corporate side, the Senate and House conference did reach an agreement on their financial reform. It's not going to be as strong as some would like, or some wouldn't like, depending on what side of the fence you're falling on. It is going to restrict somewhat banks and their investing, specifically investing with their own money. They are still going to be allowed to invest in hedge funds. And there is going to be some form of a consumer watchdog and a way to help out troubled financial firms. And it is going to increase the capital requirement of banks. The other thing is that because it's not going to be punishing or levying interchange fees on debit cards, as anticipated, that helped out MasterCard and Visa. The other thing we had this week is a judge ruled against a moratorium on offshore drilling, although that's being appealed. So we could see energy stocks possibly do a little bit better, although again, until some clarity over what's going on in the Gulf, maybe energy stocks will continue to lag. So next week, we do have some news that can move the market. All of this personal income and spending can move the market. Consumer confidence can move the market. ADP can move the market. And, of course, the unemployment and non-farm payroll next Friday can move the market. We're coming into the 4th of July weekend, and I believe the market will be closed on the following Friday, which will be, I'm sorry, not on Friday, the Monday, which is the 5th. I'll clarify that for you in our upcoming videos. So coming up on Monday, we've got personal income and spending, no real earnings this week, and we still have the same split plays that we've been looking at for a couple weeks. Just want to go ahead and take a moment to remind you guys that the accendo-traders 30-day challenge will be beginning on July 1st, 2010. Again, beginning of July, we will start our accendo-traders 30-day challenge. And those of you who have participated before know that it's just a month-long series, educational series on getting people up and going and trading. A video will be posted each night. We want to get the feedback, people posting questions and helping each other move along as attempting to become better traders. But this 30-day challenge, compared to the ones in the past, will have a futures slant to it, learning how to get started trading futures. So Again, July 1st, our first video will pop out there. Accendo-traders 30-day challenge. Watch the video, post your questions. Let's start our community. And then each Saturday in July, we will have a free webinar where we'll come together as a group and answer any questions as a large group also. So again, Accendo-traders 30-day challenge, July 1st, 2010. Okay, so we're going to take a look at the S&P 500 on the daily chart. And the first thing you should see, our YouTube folks, we're all we're going to be able to do is cover the S&P 500. Please take the time to subscribe to our podcast and get our full 30-minute video on all of the markets. And we also focus on futures also on our podcast. But you can see pulling up on the daily chart this 10,065, the low of Friday's action, as support. And when we do that, we can also see going back through last week and the last couple weeks of May, that support area in. So that's where we want to watch and possibly put alerts to go short all the way down to the 10,040 level if we break 10,065. We have our first resistance at 1100 with our ultimate resistance at the 50 moving average, and on the daily chart you can see the 50 and the 200 are sitting at 1110, 1112 range. Now I'm going to shrink on down to the hourly chart, and we talked about this last week. We can see how we drew this uptrend line, and we said as long as we stay above that, the market should be able to contain and continue its move higher. Once we broke that down, uptrend line, that's where we tanked. I'm going to go ahead and blow that up a little bit. But on the flip side, if you're going to follow that line on the upside, we also need to go ahead and take the time to draw that line on the downside, and you can see we did break that Friday afternoon. So anybody watching that, that's probably why you saw a big initial surge, because we broke the downtrend line on the hourly chart. But we ran to the 20 moving average and fell back. We bounced again off this line. I would say this 1180, this 20 moving average, is another place for people to watch to go bullish. If we can break the 20 moving average on the hourly chart, that's certainly going to be good for the bulls. I'm going to go back to the daily chart because what I forgot to mention was look at our indicators. Our three musketeers, stochastics looks like it wants to turn to the upside. MACD looks like it wants to cross over to the upside, and RSI looks like it wants to do the same. So our indicators are trying to turn back bullish again. And the other thing that's key about where we're at right now is take a look at the monthly chart, and you can see we are sitting at the 200 moving average as support on the monthly chart, and that again is at our 10,040 range. So we've got support underneath us with the 200 moving average. We've got resistance above us on the hourly chart, with our ultimate target being around 1100, but we need to break 10,080 to get there. As we move on to the education portion of our video, using the book Trade Your Way to Financial Freedom, and we're talking about judgmental biases and how those biases affect the development of our trading system. In this particular section, Dr. Van Tharp is talking about how some traders feel the need for control. Now, we've talked often about the fact that there is no control in the market. It's like the Matrix, where you see the numbers coming down. It is what it is. It's not personally out to get you. The stock market doesn't hate you. But some traders believe that because they've got this supercalifragilisticexpialidocious indicator, that they've controlled their entry, and therefore, ha-ha market, you must do as my indicator or my chart pattern says. And then they find out, uh-oh, I'm in the trade, and the market does whatever you want, and you don't have any control. So that's why it's not systems that's important. It's being able to follow that system with discipline and lack of emotions, and that the market is not out to get you, and there's no personal vendetta that'll make you successful because you're consistently following a set of rules. You guys know about our partners. We've got a great futures trading room. You can see a great result for this week. Results are not guaranteed. Trade your own risk. To get these results, he uses 3 to 6 contracts. And if you sign up through us right now, through our link, there is a $100 discount after a 5-day trial. I'm in that room. Alex is a wonderful, wonderful leader, trade caller. If you're going to be trading futures, intraday mini margin as low as $300. 20 free contracts if you sign up through us. We got a great charting platform for you, and we have a futures trading plan that will help jumpstart your trading. Of course, we're updating it for our 30-day challenge that's coming up. Don't forget that starts on July 1st. Follow us on Twitter. Check us out on Facebook. And again, for our YouTube folks, you need to go ahead and subscribe to our podcast so you can get our full 30 minutes where we go over everything in a little bit more detail than we're allotted in our 10 minutes on YouTube. Trade your own risk. You can lose all your money. Futures and trading is not for everybody. Thanks, guys, and I'll see you next time.